Let's talk to Patrick Reid. He is a co-founder of the Adamis Principle. Very good morning to you, young Patrick.
Hi, Nick. How are you?
Living the dream. It's Friday. Right, 5 thought-provoking slides. Let's kick off with the first one.
Right, the first one here, euro yield, quite calm, but euro still off. So I just want to take a pause. Let's rewind 3 days ago, before all of this madness of the Brexit circus happened. We just want to take a deep breath and say, look, what was the temperature for the euro dollar? It didn't need any more sickness from Italy to be off. That's clear in chart 1. Look at the yields, Italian yields. Okay, not great, but not tearing up.
Yeah.
For Spain and France also.
Okay.
So the next slide is quite interesting too. This is the corporate debt. So this is another thing that hasn't really, been spiking, but it didn't need, euro dollar being off again, didn't need that much encouragement. So this is the market IG CDS Euro USA spread. Still not looking great for euro. And I'll come to a bit more of that later. But the third slide, for me, is probably a potential reason why, say, 3 or 4 days ago, euro was off. This is real yields. And obviously, real as opposed to nominal is without CPI. And as you can see, both weaker yields and, that supports the weaker euro too.
Understood.
So the next slide here is euro dollar daily. We're creeping up. We break through that huge level, 113, the big figure. We popped above. But I just want to say something. At the moment, it's all being led by sterling and Brexit. Recently, eurodollar has been, playing sympathy and certainly starting to price in as we get closer to a potential hard Brexit.
Yeah, it went through a big level. Okay, what happens now?
Well, I mean, the thing about flows and politics and circus and all of that stuff, you can forget levels. So usually what happens, 113, the big figure, it was a double bottom, massive. There was handwriting in China. Dollar renminbi was close to 7. There was a lot of potential buying down there. But all bets are off when it breaks. You could argue it's a failed break, but at the moment, I would just take a step back from putting 100% behind any belief in any level, doesn't matter how big it is, because of politics.
So are you saying that basically the technicals are thrown out the window at these times?
Yes, I am absolutely saying that. However, they will come back when things calm down. And it's a bit like losing a foothold on a cliff. You lose it, but then it doesn't go away, right? So you can regain the foothold at a later date.
But the way the textbooks are written, they suggest that everything is in the price and therefore technical analysis is a gauge of people's sentiments, okay? I've never read in any textbooks that you throw them away when the politics, the macro, the fundamentals, the sentiment is, let's call it volatile, and the charts don't work. Is this a new piece of work that you've worked on?
It's just my experience, really, collective experience over 30 years. And, I talk to a lot of macro guys out there, and it's their experience as well. What I will say is, yes, everything's priced in. The price is always right. I could come up with a million levels for you, Nick. 113 is a great level for me. It hasn't respected it recently. And why is that? It's because of Brexit, right? So, somebody else will say another level is a brilliant level. I may disagree, but you can find it through various indicators, various fibs, various moving averages, 55, 100, 200. I mean, at my very core, I'm a technical trader. What I have realized is I take a step back or certainly reduce my risk when I'm trading on a level, which I still do when something like this is upon us.
Patrick, on that note, thought-provoking as always. We'll talk to you same time next week. Thank you.